Good morning, everybody. Friday at last. We've all been waiting at the bus stop, and hopefully the bus is going to arrive today in the form of Powell. Morning, Kay. Morning, Stel.
Good
morning, bro. Hello, everybody.
Good morning, everybody.
Let's start with some cheery news from Belarus. President Lukashenko has just said that Belarusian planes are ready to carry nuclear armaments.
Oh, fantastic.
Yeah, great news on a Friday, eh?
So basically, we should go out and spend everything we can because the end of the world is coming.
Switch on your light bulbs, every light bulb in your house. Don't let let's screw the energy companies before we all go up in smoke. Anyway, aside from that cheery headline, let's get into some of the stuff before we obviously take it to the main event today. Right, just look at, we'll start looking at a bit of data, really, first and foremost. We'll start with what was out yesterday. Not too much after the show. We had US GDP. Well, before that, we had the ECB minutes. Not a lot in those at all. Main point being that they're going to continue, or further action might be needed on rates, as if we didn't know that already. But otherwise, pretty calm set of minutes there. In the jobs front, we had obviously initial jobless claims, which were slightly better, depending on what you're looking at. Jobless claims themselves were down a touch, but the 4-week average ticked up again. That had been easing a bit. We'd seen it growing for several weeks, and it had eased a bit, but back up only 2k, so nothing huge there. Maybe a bit of flatlining from that jobs indicator. GDP was slightly better, coming in at -0.6 versus -0.8 in the initial reading. Some of the underlying numbers, though, were pretty okay. Sales are up 1.3. Some of the consumer numbers, spending and that sort of thing, showing decent numbers, not as crap as some might expect. You can see real consumer spending now at 1.5%. This is data that's in the rearview mirror, because it's all past quarter stuff. But as we heard from one of the Fed members talking about the jobs market, is that perhaps growth may not be suffering as much as some of the market expect, or many people expect. So still in a technical recession, but it's not as doomy and gloomy as it was the first time out, in some of the details there. Then we got another one of the little regional manufacturing numbers. Seeing again here a big drop, -9 versus 7 prior. So, you know, that sector is looking a bit dodgy this month still. The numbers have been a bit up and down if you compare the Empire State and the Philly Fed. Over to Japan, and we had another lift up in inflation, the Tokyo CPI numbers. Month on month coming in 0.3, but look at the year-on-year reading for CPI, 2.9 versus 2.5 expected. The core 2.6, 2.9 versus 2.5 prior. The core 2.6 versus 2.3 prior, and beating expectations. So continuing inflation there in Japan. As we've mentioned, as Kay's mentioned, we've not heard anything from the BOJ bods regarding inflation. We didn't get an awful lot yesterday from Nakamura. But we have Kuroda to come at Jackson Hole. So will he mention it and give us an update on policy, or is he going to brush it off? The higher these sort of numbers start creeping, the more we're going to get the market questioning the Bank of Japan stance. We saw that a few weeks ago with the market trying to push the buttons and you know, get a reaction from the Bank of Japan. The Bank of Japan gave those folks a big slap and said, we're not changing policy, we're standing as is. But the more we get data going this way, particularly inflation, as I say, the greater the questioning of the Bank of Japan stance is going to grow. That could likely increase volatility in yen pairs, etc. Just looking at some of the European data, PPI in Sweden just a bit off there, year on year. Small number, the German GfK consumer confidence number, another big drop, 30.9 prior, minus 13.9 prior, minus 36.5 was the number today. Big drop even over expectations. Retail sales in Norway coming in soft. That's a bit of a growing theme we're seeing in some countries. But we had some cheerier news. French consumer confidence coming in at 82 versus 80 prior, beating expectations there. Italy, business confidence, mainly manufacturing, missing expectations and confirming a drop. But again, consumer confidence coming in higher than previously and beating expectations. So a little bit of a, perhaps a surprise there with some of the numbers from the consumer sentiment side. We'll see how that fares getting into the winter with energy prices rising, but it is what it is. Later on today on the data front, the main numbers just before Powell comes out is going to be PCE data, the latest look at inflation. So the core PCE is expected to come in a pip low at 4.7%. That's the main one to keep an eye on there. The prime PCE number was 6.8, so keep a look at there. This will get the market maybe making some last minute changes to expectations for Powell over how hawkish or dovish or unhawkish, less hawkish or neutral he is. Other minor numbers there is the inventory data, keeping half an eye on that to see if some of this manufacturing weakness, retail store weakness, if you like, people not building up inventories is going to start impacting some of these numbers there. But obviously the big item on the cards is Jackson Hole. As I say, we'll cover that in a moment. Going through some of the other items, news headlines from yesterday. We had a few Fed speakers out, so just I'm going to give a quick run through of those. Fed's George said the Fed should keep hiking until there's evidence of CPI coming down. So keeping to the theme of doing whatever it takes to get inflation down. And she said it's not out of the question whether the Fed would keep rates above 4%. For an extended period. Again, this is part of what I've been saying is that it's not maybe so much nowadays whether the Fed are going to hike 50s, 75s, 25s or whatever. It's how high they're going to go and how long they're going to keep going for, and then how long they're going to hold rates for. And quite a bit of the market is already pricing cuts 2023, but we could find that rates are going to stay higher for longer than expected. That'll keep a bit in the dollar at least as those expectations change in the market. She said it's too soon to know what to expect at the said meeting, more data to come, blah, 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 blah. George is a voter, so that needs to be kept an eye on. Harker, who's a non-voter, was out as well, saying he didn't know if the hike would be 50 or 75. He would like rates to get above 3.4% and sit there for a while. Just so everyone's aware, the current Fed rates are 2.25 to 2.5% at the moment. So getting up to 3.4%, that's around another 2 percentage points, give or take, higher. The midpoint is 2.375 at the moment. So that's another 2 whole points of hikes there to get 1 point of hikes to get to his 3.4. Again, non-voter. Bostic also doesn't know if it's going to be 50, if he'd go for 50 or 75. He was saying strong data could tip the Fed to 75, which was a bit of a strange comment because that would insinuate that the Fed is unsure over whether to go 50 or 75. If he had said strong data could tip him to 75, that would be more in line with that thinking. But to say could tip the Fed to 75 means that perhaps it's not a certainty at the moment that they go the 75. Bullard, who's a voter, he says his target for this year is rates at 3.75 to 4%. we're looking at around about 4% in perhaps a lot of central banks, because we also got RBNZ's OR out last night, who was actually priming the end of what he called the aggressive hike cycle. But he said there will be at least a couple more from them. Now their rate's at 3%, so depending on at the moment they've been going in 50 pip clips. So at least a couple more. We're probably looking at about 4%, somewhere around there for their terminal rate. So that's one Fed member who's looking at 3.75 to 4. The RBNZ looking perhaps around the 4% mark. That seems to be where perhaps the market will start judging a lot of these rate hikes to get to across the board. So just keep an eye on that, because it then allows us to extrapolate potential expectations from there on in regarding whether rates start coming down or not. I think for the Fed, there is a good chance that they're going to be going higher than 4%. But some of the others, they may be forced into that at the moment. But here's what we do is we take where they say they think rates are going to get to, and then we match that off with what the data does, and then we can make a judgment. Are they going to be right or are they going to be wrong? And thus, potentially that gets us some trades. There was a sources piece out from the ECB or on the ECB saying they're unlikely to take any decision on ending QE or APP reinvestments in September. Rate hikes front and centre rather than what they do with balance sheet and everything else. Couple of other items. The UK finally announced the energy cap price, 3,549, which was largely around expectations. Nothing really for the pound to digest on that at the moment. As I said yesterday, what may have an influence in the pound is how much money the UK government wish out of thin air to help consumers paying for that. The current Chancellor is working flat out, as he says, on plans to help people pay their bills. That price cap comes into effect on the 1st of October. There's already payments being coming out in October as well from the government to help mitigate some of those bills for the low earners. We're likely to get more on that. Really, for the pound, it's going to be about how much the government throw at it. But in real terms, it's probably not a huge headline that's going to move the market significantly anyway. While we're on energy, Siemens Energy, speaking about Nord Stream, came out with comments saying there's no new status regarding maintenance or potential maintenance on Nord Stream. Now, Gazprom came out with their notice about maintenance. Obviously, they shut down 31st of August for 3 days, saying that's in line with maintenance contracts, and they'll be working with their partner Siemens. And Siemens are coming out and saying, well, they've got nothing booked as far as maintenance is concerned. So, as usual, we don't know what's happening there. Left hand doesn't know what the right hand's doing. Gazprom have said that the turbine's shutting down, so there will be no gas for 3 days. But they have also said it will restart again. So that's a rough rundown of all the headlines that I can see. There is a few bits on China. For those in the chat room, have a look in our newsroom. There's a few stories up on there, but nothing really hugely of note to talk about today. Kay, Stel, anything on your radars or anything that's popped up on your screens?
Nothing really more direct news. No, a few bits and bobs on the Japanese. They've been recommissioning to restart up to 17 of the nuclear reactors and then build a new one. But there's an article in the Nikkei talking about exactly that and how long it could take to get those things restarted, and we are actually more talking about years than months in that article. As I was already saying, the rules of safety have been changed and tightened that much after the big quake and the Fukushima disaster that it takes an awful lot of time to restart those things. So that element of possible positivity to the yen will have to wait a little bit. And for the rest, yeah, the Tokyo CPI, Tokyo is about anywhere between 20 and 25% of the global Japanese economy. So yeah, it's important, but we'll have to wait when Kuroda will pop up over the Jackson Hole, because we haven't got a clue when he's going to talk. He's taken up nowhere in the scheme. Or was mentioned, he already spoke to Bloomberg overnight, sending the Kiwi a little bit on the defensive, saying that at the end of this year they may build in a pause depending on the data. So we are all central banks are now gradually shifting over to the data dependence, and yeah, we'll talk about Jackson Hole and Powell on that a bit later, because I think he might. Perhaps this is one of the possibilities to include, even though it was already in the minutes and in the past FOMC meeting. So okay, we'll talk about that in a minute. But for the rest, nothing.
Just quickly on the one of the comments he did make was that it was the poor retail sales. He mentioned those as being a sign that higher rates were biting. As we pointed out yesterday, that we had 2 quarters of negative retail sales there. So they are looking at the data, seeing the effects. Perhaps these sort of countries and economies will react faster in halting hikes or even going into reverse than the Fed are likely to, given that they're still saying they're not really seeing the full effects of hikes yet. Stel, anything on your radar this morning or overnight?
Not really. I think we're all waiting for Powell.
Yeah.
And any trade you make before this afternoon, it's basically a gamble on what it's going to say. So no, I don't have anything. We didn't really get much data out. We had you talked about it, right? The German consumer climate, which you missed.
Yeah.
Nothing though groundbreaking. Core PC, obviously, we're expecting today, and we want to see if this ticks down. If it does, then I have a feeling that Powell is gonna use that to kind of tilt a little bit towards the dovish side. I don't expect any fireworks from Powell today, but yeah, no, I don't have much to add, I'm afraid. No
worries, mate. No worries. Right, so just on the Jackson Hole agenda, which we've been waiting a week for. So it's come out. We know Bailey's there. We know Kuroda's there. We know Orr's there. We know Schnabel's there. Really, the only people we've seen who are on there are Powell, Villeroy, and Schnabel. They're the only ones who are actually down as, got an event. The others, we don't know where they are. Well, Thomas Jordan's in there as well, as you say, Villeroy, Schnabel. So where Bailey's turning up, Kuroda, and any of the others are, we don't know. They could be in some of these general discussions. It's not set out. So when we get them, where we get them, we've no idea. So it's going to be a bit of a risk. It could just be a little headline blurt out. If they pop up on Bloomberg TV at one of their stages or CNBC or wherever else is out there. So unfortunately, we've got a bit of... Today, we've got some potential headline risk for people just popping out of the blue. Over the weekend, it's not going to be so bad because obviously markets will be shut, so we'll have time to digest any comments. It doesn't matter when they come out. But obviously, we still face potential gap risk if there's any big headlines from any of these others. But just to say that the agenda is pretty rubbish as far as I'm concerned, because we don't know when anyone's speaking apart from Powell. So what's Mike's just saying, believe he can still make changes to his speech up to the last minute. Yeah, possibly. So Powell may decide to throw something in there or change his speech about based on data. I said in the chat room, I'm going to be laughing my head off if his welcome remarks are absolutely nothing on monetary policy, and we've all been waiting for nothing. You're going to see a big exodus of traders taking an early weekend, I think, if we see that. But that's where we are. So right, let's get the stuff out of the way. Thoughts for Powell. We've been saying it pretty much all week. My thoughts, just to finish them off. I think there's some in the market who are looking to jump on any dovish remarks or assumed dovish remarks or less hawkish remarks. Powell could well start highlighting some of the weaker data, making it a case that at some point they're going to lower the pace of hikes. I don't think he's going to talk anything about going into any sort of reverse. At most, it'll be reducing the pace of hikes, but still hiking until they meet their objectives. As we saw from the Fed minutes and other points in time, those sort of headlines are likely to be jumped on much harder by the dovish crowd, and a reaction in prices is likely to happen there, sell off in the dollar, sell off in yields, etc. But the overall path of the Fed and objective of the Fed will remain, and that's likely to be short-lived, any selling in yields or the dollar, if there's no real big changes to the Fed's outlook and path for rates. Conversely, he could talk about the weakness and the potential of lowering hikes, but he could also then counter that by saying that hikes may need to go higher or stay higher for longer. That'll be a bullish counter to anything seen as dovish. Or he could be neutral and not give as much as all. Make a little bit of mention on one side, make a little bit of mention on the other side, and keep us all guessing until the next FOMC. So that's my view. I'm more inclined trading wise to look for the market maybe incorrectly jumping on a dovish outcome or something they see as dovish, and then picking a fade on that side rather than trying to buy into any hawkish stuff on the other side. So that's my general trade plan for today, and we'll see what we get. Still, you got anything you're looking at particularly, or any ideas you're looking at to trade, or are you just going to sit it out and pick up the pieces next week?
Yeah, as I said before, I'm not doing anything before. I am looking at levels in silver and platinum as well. We can talk about platinum later if you want.
Yeah, we'll talk about platinum. Yeah. Yeah.
So I'm looking to do stuff after the Fed, not before. So if you want to go into levels, we can do that.
Yeah. Do you want me to pop up the silver?
Yeah.
I'll tell you what. Let's talk about silver when Kay does it, because I don't look at silver a lot.
Okay.
Kay's got more text on the screen.
Okay.
So we'll jump into that in a minute. Kay, you got any thoughts about trading? What side you're going to be looking to hit or go with?
Yeah, as I was saying in the chat room and over here a few times already, I think he's going to continue the fine line. He's taken the habit of doing so even during his when he's really hawkish over the past meetings. He still was trying to keep the markets from exploding one side or the other, and I do think he will try to walk this fine line again. We may have some data dependence there. He already did in the prior FOMC meeting. If you really want to pick on words, why not just keep the last FOMC statement or minutes next to you and see what different words he said. I also think the market is looking to for anything dovish. That this is how the market just functions. The market is looking desperately for anything dovish, because it's easier to counter trade these rate spikes and the dollar being stronger in people's mind than to follow the trend and take yields higher and the euro dollar lower, dollar yen higher, for instance. But yeah, I personally think that he's not going to give us too much. People will try to find one word in there which is dovish, probably take the dollar a little bit lower, and then more than likely forced to buy back into the weekend. That's my global view. And then on the whole of Jackson Hole, I think we trading wise we trade dollars today, and then once the weekend kicks in, then with Naval, Jordan, Villarroel, possibly Kuroda, Bailey in there. I don't know where Bailey is, by the way. Mark had a really nice comment of saying that hopefully somebody locked him up in his room. Is really a waste of space in my personal opinion. But yeah, so then they have the possibility to create a few gaps, perhaps on the cross sides of those currencies in euro, yen, Swiss, and sterling. So the dollar may be relatively clear going into the weekend. The other side of the pairs may be a little less clear. So I'm going to be cautious in what I'm doing. I'm not putting on anything new into the meeting either. And I want to add just something again that I think that September is going to be a huge month for markets, because we're doubling up QT. We've had Jackson Hole. We know what they're thinking. We have the labor report coming out right after month end next week Friday, and then going into those meetings, ECB first and FOMC later. I think September has the potential to be a very big month for markets.
Yeah, no, I agree on that 100%. I think overall, when I look to trade something like the Fed, it's all about understanding where the Fed are at. Okay, you've got the short-term noise in whether they go 75s, 50s, 25s, whatever they do. But it's the main underlying stance of the Fed that's important. And for me, at the moment, they are going to do whatever they need to do to get inflation down. And if that's hiking to 10%, wherever, I'm just talking off the cuff here, that's what they'll do. And unless Powell or someone gives us something that changes that stance, the 75s, the 50s, the 25s don't really matter in the longer term. And it's the longer term that bring the bigger price moves. Yeah, we'll get market moves flapping around if, as I say, if there are changes, if they're not going to do any more 75s, if they're going to drop to 25s. But that's short-term noise. The stance of the Fed is what's important going forward. And until that changes, they're going to hike away at whatever rate they deem necessary. So that's what I'll be looking for mainly from the Fed, changing that stance. And if it doesn't, then yields are going to remain supportive, and so is the dollar. Anyway, let's crack in. Kay, do you want to take silver so Stel can give us his wise words?
I wouldn't call them wise, but yeah, okay.
Absolutely. Yes, they are wise. Stel, just come on.
Of course they are, mate.
Let me...
and their words as well, sometimes.
Grab the screen. Here we are, straight into your silver lining and your silver stuff. Stel, tell me all about it.
Tell you all about it. Well, it's a metal which is used. No, I'm going to do that. Look, I'm looking to trade it on the long side. I think everybody knows that. I always trade on the long side. So I took a trade a couple of weeks ago, if you guys remember, got out on a quarter at a really nice level. The rest slightly above break even. Doesn't matter. So I'm looking to see what Powell says. If he does not say anything dovish, then I agree with Ryan 100%. The Fed is still on course to hike more, and yields are going to be supported. I think yields are going to probably hit new highs. So that will bring pressure into precious metals. Now, if when that happens, I'm going to be looking at price action. I think if we get close to those 1812, what was it, 1812 lows, depending on the speed and the actual price action, I think I'm going to try getting long there. I'm not going to go full size as I did last time, because I think the underlying fundamentals will be stronger for a move lower. So I'm going to go probably a third or half size on that. But I always want to be long silver. I just try to pick the right levels. Now, if he's if he's hawkish, I mean, strongly hawkish, I'm not going to touch it, even at those lows, because I think those lows are going to go. So the other scenario is if he's dovish in any way, I'm going to do what I did with the uranium ETF, that URA, which is basically buy wherever the market is. I don't care if it's up 3% on the day. I really don't. URA, I bought at 21.20 and it was up 5% at the time, and it ended up the day 12% up. So it's just something that I want to get in, and I don't want to miss it. So I don't because of my horizon being so long, I'm not a short-term trader. I don't care if I miss the first 2 or 3 or 5%. So I'm just gonna get in wherever the market is. So that's the plan. Obviously it will depend on Powell and what he says. But I tell you this: if Powell is dovish today, for me, this signals that the change is coming, and it's coming fast from the Fed. Because as I said before, the first little step was to go from off the automatic pilot to meeting by meeting. Now, if we do get a core PC today, which is weaker than expected, if it's lower than last print and Powell starts coming out dovish, I think we're close to the Fed ending their hikes. I know it sounds crazy. They shouldn't, but I think that's where we are going. Pow, pow, pow. Yes, Bran. So that's my strategy for silver. It's very similar for platinum. I want to be in platinum as well. I actually think platinum has very good potential. If you look at the platinum versus silver ratio, it's near multi-year lows. Well, go XPT USD divide by XAG USD is probably easier. There you go. And if you can see the platinum chart before, we're also close to the previous lows, etc. Same as silver. So if you go to a weekly or a monthly chart, you'll see, yes, we've been going up recently, but in the grand scheme of things, if you scroll back, we're still quite a bit below. You see, we're close to levels. That 35 to 40 area is huge, I think, and I think if we break out higher, that's going a lot higher. So I'll be looking to get long both silver and platinum, probably equal size. Maybe actually I like silver more, just because of its industrial use. And remember, platinum has had a big drop because of its use in catalytic converters, which is slowly being reduced. And there you go. So again, these are the two I'm looking at, and Powell will give us direction. That's what I think.
Anything else you want to look at while I'm on the charts? I can put it up for you, and then you can comment anything at all. Still,
you mean in other instruments?
Anything else?
No, I mean these are the two. I'm really focusing on these two. I mean, any move I want to make, it's going to be, let's face it, everything you trade is going to be dollar positive or dollar negative. Yeah. They're pretty much everything is correlated to the dollar. So this is going to be a dollar negative trade, which I want to put on. The question is, when is the timing right? So so that's what I'm looking at. I'm not looking really at currencies that much at the moment. I'm looking at metals because I really think they have the potential to bring really big percentage moves.
Absolutely.
To get a 3-4-5% move in a currency pair, man, you got to wait ages and ages unless
you're doing
you leverage massively.
Unless you're doing Euromix like I did, that's down roughly 10% over the past few months. So.
That's a good one, actually. Yeah, you're right. Yeah, I don't trade. I very, very rarely trade exotics. The Turkish lira or.
No. I'm staying away from Turkish lira, ruble. I can't even trade it anymore on my platforms. They've shut it down, and they haven't. Well, most of them haven't even reopened the Turkish lira. Where it would be. Perhaps still very volatile, but not as volatile as it used to be. But anyway, So I'm just looking at these yields here, and I think so 3% is one thing, but it has been crossed that often that it really lost its psychological value. I think the more interesting, in my opinion, is that if we get back to start to tackle 320. Call it 325, this one as well. I think the 320, 325% on the 10-year is going to be very important. And then we see a bit of a support line here, which comes in today around 295. That may be a first indication. But then really, if you go back to below 290, I think then on the 10s, we have to be careful. And ultimately, if you look at stuff like dollar yen, for instance, this is going to be still the main driver. So keep a close eye on whatever happens this afternoon, whatever Powell says, keep an eye on yields, because the bond market has a big say in what's going to happen to the dollar. So per deduction, yields will be the driver for much what's going on. We can talk about yield divergences that will come into play once the Europeans or Bailey or whoever has done talking as well. But for the day, I think the dollar yields are going to be really the main driver. And then from those dollar yields, as Stelios just mentioned, you can trade whatever you like, but the metals should be big movers. So let me grab back quickly the silver for the more short term. For those who trade it more short term, I'm looking at two things, and yesterday it capped again. It's the 1940. I'm a little bit long. I sold out most what I bought just under 19. I sold it out because we are going into Jackson Hole. I don't know what's going to happen. I really closed a lot of my positions. The only thing that I have on now, and it's a bit of an exotic cross, but I've sterilized my dollar shorts against silver via dollar CNH long. So I'm actually in silver CNH, but I am monitoring both pairs separately, really. But my dollar position is virtually flat right now. And on the underside, I'm going to be watching this one, 1880, 1870 for clues. It may be enough because there's still the chance. I mean, the market wants to trade a lot on Powell, but there's still a chance. We are just going to trade ranges, and we're getting algo blips left, right, and center. And at the end of the day, we might still be in this kind of triangle or this range, 40-cent range on silver. I'm going to have a close look what's happening around 1870-80 already for a starter. Then as Stelios mentioned, the prior low, and where we have to be really careful is what happens if we really get a counterintuitive or non-expected very hawkish tone. What may happen to silver? I mean, it's still not excluded that we are going to go back to this $17 level, but it's really not my preferred scenario. But never say never in markets, right? In financial markets. Okay, I'm going to move on. Gold, yeah, undecided here. This trend line is watering down gradually, but we are really very short term under 1740. But I'd rather watch this 23-28 zone and this 74 78 zone for directions on gold, really, if we take a real direction. As I said, I mean, it's possible that we just range trade this afternoon as well. But if we start to see a real direction here, if you can grab it if it breaks back above prior high 1765 if you want, but there's still going to be a bit of traffic to overcome and a hurdle to overcome around 1780. Euro dollar, I'm as you see, I'm actually not really I haven't updated my short-term charts because I think we are in this range for the time being, with 99 on the one side, 103.5 on the other side, and then in between we have this 101 101.10 that which was a 61.8 of the short-term move around here. So in the middle of the range. I think those are the three levels really to watch. If we start to break above 101.10.15, there is perhaps a chance, but because that will have signaled some change in rhetoric from Powell. In that case, there may be a chance that the euro puts in a stronger recovery. I would argue, though, that we have better currencies to trade than the euro because of the weight around the euro's neck. But anyway, we may see bigger moves. Dollar yen overall still in this upward channel. I need to clean this one up a bit. Perhaps now is not too bad a time. Still thinking that this 137, call it 50, 70 is going to be important if we get back up there. On the underside, 136 the figure to start with, and let's have a quick look at where the daily cloud is today. Well, it's right where we are. So perhaps for the opening of next week, this may be a bit of importance, whether we are above or below 136.60 going into the start of next week. If we trade above, there's every chance that we are going to go back to 137s, because that will mean that Powell won't have been as dovish as some expect, or hasn't been dovish, and that Kuroda hasn't said anything else than I wish you a nice weekend. Then I think we are going to open higher again in the dollar yen. All will of course depend on what the US 10s are doing, because that's where the dollar yen is glued to. On other stuff, dollar Canada is still trading around in ranges for me for now. 129 on the underside. And 130, 129.90, 130 on the top side. Okay, this one has, of course, the potential to move on Powell, but I would only look for moves if we get back up to 130, 30, 2030 up here. Maybe a little counter trade if he's not uber hawkish, but just continues on his same plan. If in turn he starts to change tack, there may be a fair chance to break below 128.95 figure and get closer to 128 again. But I'm quite interested though in this one, Aussie dollar. We are possibly, of course, everything depends on Powell again today, but we are possibly trying to form a head and shoulder here, and this trend line, which was broken, retested, then we went lower, is also hovering around this 70.5 for now. This is a prior high, 70.5. The trend line is there, and we've got a bit of longer term fib activity also over there. So if ever we see a change in tone by Powell, watch this 70.5 very, very closely on the Aussie. Call it 70, 50, 60. Okay, don't go and look at one pip in a market that can move 100 today. If in turn he talks tough, watch for a move back below 69, the figure. And that could bring us back quite closely back to the 68, 50, 55, of which we bounced a few times now lately, 3 or 4 times already, and which has been really successfully traded by a few guys and girls in our trading room, by the way. So I'd watch those two levels very closely. It's a 2 big figure range with an in-between level around 69, the figure. A quick run on the what I'm in now. So I've bought this Aussie yen on the break in very small. Lobbed the couple out this morning with a bit of profit. Also because we are coming into this little resistance zone between 50.65, call it 50.70 on 95. And I want to have positions really reduced to a minimum going into the hole. I'm still interested if nothing spectacular comes out for this cross, particularly Kuroda, to get deeper into this, because I reckon there's a chance on the more medium term we're going back to visit those higher levels if we don't see any change from the Bank of Japan. Couple of other euro crosses yesterday. I covered this. As I said, position reduction has been a good ride, and but we are starting to get perhaps a little bit of a recovery of the euro. We have to see what happens if we close the week back above this prior low, which is around 143.19. So I decided to take it off just for now, just to wait and see what's going to happen over the weekend. Schnabel, by the way, who is a speaker this weekend on Jackson Hole, is a hawk, the German member of the ECB Governing Council. So expect her to be hawkish. I wouldn't expect anything else. If it would come out anything else, that could give euro a real slap on the opening come Monday. But she's a hawk. Expect her to be hawkish. Reader-wise, somewhere in between, a bit. He could be qualified as a bit dovish, but he is more like a follower of fashion and really repeating most of the time what Lagarde says. So we'll take a closer look at that again come Monday. Same thing on the EuroCAD. Closed it today just because it made decent enough money. As people know, I've been short again from around this zone and took the last bit of early morning because I want to have a peaceful weekend. But still, overall, I think we are in a quite a big resistance already. If we would get back up between 130.30 and 131, the figure, I still ultimately look for a move a bit lower in this one, for as long as oils and gas, things like that are not coming off, and not forgetting that Canada is actually part of the American bloc. So somewhere it may benefit even if Powell stays on the hawkish side. Last couple that I'm watching, as I said, the dollar side of this positioning, dollar CNH, is nowhere near what I want to have or what I would like to have. I'm going to let Powell do his thing first. China, yesterday they fixed the dollar China, fixing well below where the models were. Today they brought it down, the difference to 50 points, but then they are still below what the models are showing there. So they are trying to show us a bit like, guys, don't go to heavy selling yuan still. But I think Powell has the power to send this thing either back to supports around 678, 79, where I'll still be interested, or break and hold above these prior highs, and then probably going to shoot for 7 sooner or later. Euro makes it's still the same, still looking exactly the same picture. We are trying to get back up to the 20. It's more like euro coming back on the crosses this morning, gaining a bit, but apart from that, I think this is still quite a decent carry trade. Any move back up there, I'm going to try to add a little bit to what I've got. And with that, Ryan, back over to you.
Thank you very much, mate. I'll grab the screen back from you. There we go. Just going to look at Aussie Kiwi. Lorena's asking that there. Excuse me, I hope I pronounced your name right. Long and looking for some levels there. Well, obviously this one has had a bit of input from the Kiwi side based on Orr's comments on potentially coming to the end of their aggressive hike cycle with maybe a few more in the pipe. Got some decent long-term resistance up at this high 112s, 113s. That's going to be a marker. I think the risk for longs here moving forward is that maybe the RBA also find their hiking level and indicate the same, in which case you're going to see a counter reaction to what we've seen from the RBNZ, and obviously you'll see a dip there. So if you want it technically, the perfect storm would be to, maybe look at taking some money off the table if you get up to that high 112s, 113s. Reducing some of your risk, maybe looking for that turn from the RBA too, but that's, that could be some weeks, months ahead. But as I say, technically, then you're looking at the 38.2 fib of the big move from, what was that, 2011? Let's double check that. For 2011, down to that low there. We've already had, we can call that a test there, close enough for a test. So that's your big level after that. So you've got places where the price is going to ask a question, and obviously keep an eye on some of these highs here too. Support. Let's just zoom it in a little bit further to have a look at the support areas. So this is a bit of an old line around 111. Let's call it that. But it's just one of those little pivot areas where, if we're below, we stay below. If we get above, we can hold above. So that's really going to be your main area for support. If we're back under there and start to hold under there, perhaps we've seen the upside moving there. Paul, can we look at S&P and yields and oils? Yep, sure. I'll cross a bit of that in a moment. What I do want to say about today and trading today, which I think is very important. We've been sitting here all week waiting for this event. It has the potential for Powell to utter a comment and the market move massively. The problem we have in our retail world is that it's very hard to grab a comment and grab an entry at any sort of decent level. The machines, the algos, they're all going to be well ahead of us. So for me, the exercise these days is not so much about trying to grab a headline as soon as it's uttered, but what the price does from there in. So my exercise in all these things is looking for the levels, going over the charts, plotting my levels, and then rating the levels, if you like. What levels am I really going to be interested in? I'm not going to be interested in the 100-day moving average on the 30-minute chart if it's sitting at 99.90. No interest whatsoever. And a lot of the near-term tech, I'm not going to pay too much attention to or give much weight to. What I am going to look at is the bigger levels. So, for an example, in euro dollar, 99 is the big level for me down here. If we get something hawkish for Powell, if we get the dollar going on a bid, and dollar's getting bid up everywhere, if we can't break that level, that is a big clue to me. That's a big signal. It says to me, there's enough here at 99, whoever wants to buy it, to stop the price from going further, no matter what the news is. So that then gives me where I'm looking to trade. And on the other side, it's a bit messier on the upside. We have this zone here, 50s, 70s is a bit more short term, just based on prior action going back to July. But again, if we hit there and we can't get through it, if Powell's a bit dovish, that tells me something else. Now, for the euro in particular, you've got to weigh up everything that's going on the euro side as well. So if Powell is dovish and the euro's going to fly, the euro's still got all its problems around its neck. It's still got its own problems with the ECB going on a slow hike path, problems with the economies and recessions and negative data, problems with the Ukraine war, energy, all that sort of stuff, droughts, you name it. There's still all that problem around the neck. So even if Powell's dovish and the euro jumps, you've got to be thinking, well, how far can it really go? Can it really get up to 103.40? Really dovish news? Maybe. Will it have enough gumption to break that, given everything that's around the Eurozone's neck? My answer would be probably not. So to some in the market, I think any big jump on dovish news in the euro is going to get hit for all those reasons that there's still no real reason why you want to buy the euro. But price is going to do what price is going to do. So that's why I look at my levels, I plot my levels and say, right, if the market's going to move, these are the levels it's got to take out. If it can't, that potentially gives me my trading opportunity. And that makes it easier for us to trade the aftermath rather than trying to jump into a headline, because it means you can sit back, you can assess the market, you can give it some time, you can let it come down to 99 if that's what it wants to do. Maybe it does have a little dip, 10 pips under, 15 pips under, but if that move doesn't last long, if it lasts a relative 5 minutes and we quickly back above 99 and then we find it as support again, you know, those are the little clues and signals that give you your potential trading opportunities. Now, I don't mind perhaps doing 2 or 3 trades and let's get the little drawing tool out. You know, if we get a move something like this down here, we get a bounce, you know, fine. That gives you a clue that that level's still strong. But maybe it doesn't bounce high, and then maybe we get a little move through here like that. Okay, if it doesn't collapse and maybe gets back above, then things are a bit uncertain. Maybe we get a little bit of uncertainty going like that, and maybe you try a couple of trades, 10, 15 pip stops, and you get knocked out. What you're looking for is for a definite confirmation that that level's holding on the upside, or it's broken and it's holding on the downside. So soon if you get a confirmation like that, then you're potentially heading for downside. If you get in a confirmation like that, then potentially you're looking for the upside. So it's all about letting the levels do what they want to do and waiting for those little confirmation signals. Are we breaking? Are we holding? You may get, as I say, you may get a little bit of chopped around in the minutes when that happens, but look for the real price move to happen, and that's the one you want to try and trade, because that's the one that can bring you your pips, rather than trying to guess and get into it. So do that across all your pairs, but also remember to factor in, we're looking at the dollar because this is Powell and this is the Fed, but always remember there's another side to the currency. So the same thing for the pound. You know, are you gonna get into heavy longs in the pound given what the UK faces? No, but you might get a decent reaction in cable, and if it's to the upside, you're going to want to try and ride that. If you're long, take your money, look at where it might run into trouble, and then start heading south again. So that is what you want to do as retail traders. Go over your charts, pick your levels, then discount some of your levels if they're too close to the current price, and look at the wider ones and see if the market's going to move, it has to break these, and what are you going to do if it doesn't? So that's the sort of thing I'm looking at, and I'll go through my charts and I'll pick those levels out, and then obviously see what happens with the news. Right, so S&P, let's have a look at this quickly. I do realise time is ticking on. Where am I going? Where am I going? Where am I going? There we are. So, well, I've been saying this for quite a while, since I've been back from holiday. We look to be playing the old big figure tennis match. You know, we had to move down near 104. We got the test of 41s. We got the test of 42s. It's holding. You know, 43s on the upside is your level. You know, for me, if you want to, you know, not get stuck into the noise, it's the big figures that are playing out. You know, if we can't break 42, where are we going to go? We might head lower. It's the same thing as I'm just talking about the euro dollar, you know, at 99. You know, see what the levels do. Here we have a level, 42, we can't get over. We've had a few attempts at it. Let's just come into the shorter term. You know, we had a couple of attempts low at 41s, a few attempts at 42s. The market's saying you ain't coming past here right now. So what do? If Powell causes us to break above, is it going to hold the break? Look for the confirmation. If you're not confident in just trading it as it moves above, then wait for it to come down and test the level. If it tests the level and holds, that gives you the confirmation. Then it gives you some conviction to go for longs. The same for shorts. If it comes down, if it comes up, you want to short it here, fine. If you break by 20, 30 pips, that's potentially where you're wrong. But again, you know, you can wait and see. Does it break above, then come straight back down and flip-flop around the line for a bit? Makes it a bit uncertain. So, you know, trading is simple. You know, you don't have to make it complicated. You've got one level, one line, one number. The price is either going to hold it or it's not. It's what you do with that matters, and how much you risk against that matters. But there's nothing wrong with letting the Powell comments fly through the headlines, letting the market jerk around as it wants to do. Give it a bit of time, then see what the market wants to do after that. Can it hold the breaks? Can it hold the levels? And that's what you go with. So as far as levels goes for the S&P, as I say, big figures for me, 41, 42, 43. Trade it as you see it. So let's have a look at oil. Let's have a look there. I'm just going back over some of the other comments too. So oil, same bit of situation. Okay, we're back in this for WTI. We're back in this zone that I've been keeping an eye on. I spoke about it yesterday, I think, or the day before. It's a bit of a pivot zone. You know, it's an area that has been historically over the last few months, you know, an area where the price has done something. Hence why I've still got it on my chart. Now we had a little bit of a move below, got a bit messy, but then we had a test to the higher side, held. Now we've had a test to the low side. Okay, it broke it, but we call that a hold. You know, with oil, 10, 20 pips isn't going to make much difference when you're talking about this. So what does this show me? Bit of indecision again. And the same thing, if we get below the lower end and hold below, then further downside is likely. If we get above the top side and hold it, we get a move here. And now the next area of importance is up at this mid to high 95s. That's where you're looking at your last level. That's where the market's shown us it's found resistance. That naturally becomes a level on your chart. And thus you trade it. As for yields, these obviously going to be another big important mover. What happens here?
We did cover yields before on the 10th.
You covered them. You covered them, yeah. But
still,
okay.
Yes. I don't know if the person maybe wasn't online yet, but we did cover the yields.
Yeah. I just wanted to
290 on the downside and 320.25 on the top side. For the 10
year. I just wanted to emphasise, you know, it could be the main driver for the dollar outside of what the dollar does. You know, if the dollar collapses over some Fed comment, but yields hold up, you've got the potential for the dollar to reverse, a stronger case for the dollar to reverse. So it's more, you know, as Kay said, Kay still went over the levels, but I want to talk about the potential reaction of yields. You know, if the dollar dumps off, but yields don't follow, you know, keep an eye on that, because that will indicate that the dollar could snap back if yields then carry on higher. So you need to have all these little items in on your charts, on your screens, flick around them, check what each one asset is doing to give you an idea of what the rest of them may do. That's my view on yields and how to use them for particularly for today. Right. So anyway, all bar the talking, we're done as far as Powell's goes. I don't think there's anything more we can say or add to what we've said before. Now we're just playing the waiting game again and see what happens and react to it. If you're not sure, there's nothing wrong with staying out, letting the market do its thing, come back on Monday, get back into trading. Depends on how you trade, what you trade. If you're a scalper, you want to ignore all this and come back on Monday. Be careful of the weekend risk. Watch out for those speakers that maybe over the weekend when markets are shut. We don't know when they're popping up, but they're likely to. Apart from that, have a great day the rest of the day. Trade safe. Thank you very much for your support of the Flow Show and coming and seeing us all here. Trade safe. Have a great weekend, everybody. Thanks to Stel, and who's already buggered off, and Kay. Have a great weekend, guys.
Have a good weekend. Trade safe.